Tom takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow Industrials finish up 92, NASDAQ up 9, S&P's up 6.5, and now we're going to go over to our man, Mr. Chris Gaffney. Chris is the president of EverBank World Markets. You've heard him many times right here at TFNN. We're always so lucky to have him on right around the Fed meeting time. Now, as you come over to our website at TFNN, folks, check out the new launch that EverBank, we're launching it right here, which is a beautiful thing. So if you go under the carousel, what you're going to see, EverBank launches the new 5-year market-safe currency comeback CD. When we're talking about, the currencies we're talking about, folks, is the Australian dollar, the Canadian dollar, the Chilean peso, the Mexican peso, and the South African rand. And what are those currencies? Those currencies, folks, are commodity currencies. It's a free money world out here. The Federal Reserve decided that, I think the market decided, the bond market has been saying for quite a while that the Fed may want to go up on rates, but that bond market just keeps pushing those bonds higher. Chris Gaffney, welcome back to TFNN.
It's always a pleasure to be here, and yeah, I think the Fed cried uncle is what I think happened. They finally had to succumb to the market and actually brought their expectations down to really what the market's been saying for a while now.
It's amazing, isn't it? I mean, fundamentally, Chris, right? Looking at the rates of the rest of the world, it would seem that it was hard for us to go up, But, because the Fed said they were going up and, the economy's pretty good, it's like, okay, yeah, you're going to go up. And then all of a sudden the realization that doesn't make any sense, man. The 30-year bond, folks, in Japan is, 0.19 of 1%. It's like, oh, my God, right?
And what that does, with zero interest rate, look at the 10-year, look at the yield curves, there's no expectation of inflation. And really, the Fed and other central banks are trying to pump this market full of money, and really, you've got the printing presses on really a high drive right now. I mean, the printing presses are running overtime by all these central banks, and what that does is it leads to uncertainty. It leads to really a question on just how much credibility these central banks have, and more importantly, how much control these central banks have of these economies. It's starting to question it a little.
There's no doubt. Sometimes when I'm thinking about it, I don't even want to let my mind run so far. Do you know what I mean? Because what it is that I'm saying to myself, and I'm a commodity bull, but every time I put this through my head, I'm saying to myself, you know what? When you have money that costs nothing, we know that there's only so many hard assets. Bottom line, that's where we're going. So let's talk about, you guys always come up with some great products. Let's talk about this product.
You bet, Tom. And we've had several calls from listeners of your show on our last issue, the commodity CD that we issued, and this is really kind of a follow-up to that.
Yes.
It's a different way to play the commodity markets, and really in a way that you're looking at currency returns. So the CD is a 5-year CD. The important thing is it is principal protected. So just like all of our market safes, there's no downside risk. You can't lose any of your principal by investing in this CD. And what we do is we take and value each of these 5 different currencies at the beginning of the CD, and then we compare the ending value of those 5 currencies, and they're equally weighted in the CD. So at the end, the upside performance on the CD is going to be tied to the performance of each of these 5 currencies. No upside, cap. So, you get all of the upside of these currencies, none of the downside risks. So
that's amazing.
A great way to play this this currency market. And these currencies that are involved, as you mentioned, are commodity-based currencies. I mean, you got Aussie and Canada, both mining, and Canada with the oil, Chile with the copper.
Yes.
I mean, one of the industrial
huge.
Metals. Mexico and South Africa, again, with precious metals, so Mexico with oil. So it's a way to play the comeback of, in particular, really the mining commodities and oil.
And, you know, folks, so picture what happens here. Whether you have an IRA, if you're in the, you know, the CD market, the only thing that you're giving up on this 5-year CD is whatever your bank would give you on a 5-year CD, okay, which we know is, I don't know the exact amount, but I know it's hardly nothing, okay? So,
yeah, and that's what we call the opportunity cost.
Yes.
And it's similar to the reason we argue. I wrote a piece the other day about owning gold and precious metals and how with interest rates staying at lower for longer, you know, there's a real case to be made for owning precious metals because there's no opportunity cost. Well, this is the same thing. The opportunity cost you're giving up by investing into this CD is whatever the interest you would earn on a CD at a bank. So again, no risk, very little opportunity cost, and unlimited upside. So.
And the so the way this works, folks, the launch is today. To open the account, it's a minimum of $1,500. It's FDIC insured. You have plenty of time, folks. This is a great product. If you have a self-directed IRA, that's a great product for that because you know you're going to get your principal back. Bottom line, you're going to get your principal back. And if the upside is there, well, guess what? With no limit on the top of it. Now, that's a little bit different, and I guess we're going the full 5 years, which is pretty cool because...
Yeah, and that's the key. You do have to keep this money invested for the full 5 years. That's a very important part of this CD. You can't pull it out before the end of the term. But, again, for IRAs, it's so important to make sure you get return of principal as well as return on principal. So this is a way to get into that volatile market in an IRA. It's either IRA or non-IRA. You know, you can put regular taxable money in also. $1,500 minimum. It really is a product designed to take advantage of these volatile currency, what can be volatile currency markets. And really right now, Tom, if you look at just like the commodities were at a low point and had some value, these currencies have been beaten up. I mean, these are commodity-based currencies. They've been beaten up by the markets, and that's usually the best time to get invested is when you know, they've been beaten up and they're rebounding. And we've seen them start to turn, and we think that, you know, this dollar and the commodities in particular are starting to, the dollar is heading for down and downside, and the commodities are headed up.
Yeah, and, you know, yesterday, you know, when Yellen was out there talking, folks, okay, one of the big articles on Bloomberg was Summers versus Yellen. And, you know, the Summers theory, and this started in Japan, is that older, you know, demographics, they save money, less productivity, and, you know, that's lower rates on a continual basis. And, folks, if we have lower rates on a continual basis, guess what? Commodities are going up because too much cash is chasing that hard asset. You can go to our website at TFNN. We got it right on the carousel. You can hit that. Or you can just give EverBank a call. Their number is 855-750-4051. Now, remember, folks, this is a limited-time deal. The funding is going to be on July 14th, but call them right now. You can get it set up and get yourself set up for the next 5 years. Chris, you have a great one and a safe one. Of course, we look forward to having you on again, and congratulations. It's just another great product that EverBank puts out.
We keep trying. Thanks again.
It's a beautiful thing, brother. Have a great one, man. Have a safe one. You stay right there, folks. We'll be coming right back. Our phone number is 877-927-6648. Many commodities are trading at relative lows. And now you can take advantage with EverBank's new limited-time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content EverBank is a member FDIC.